Well, a bit of a subdued start to the week on the local market, with the public holiday in Melbourne, of course, meaning volumes were down. Earlier I spoke to Charlie Aitken from Bell Potter. Well, Charlie Aitken, various markets seems to have paused, with everyone looking around about where the growth story is. But is that true of our market, or are there other factors at play here?
No, Tiki, I think that's true of Australia as well. I mean, remember last week we had bad GDP numbers, unemployment went up, terms of trade was a surprising deficit, not a surplus. You can see, look, Australia's struggling to find growth as well. So, yes, I think the lack of growth theme is a theme in all global markets, including Australia, and it's one of the reasons we drifted off a bit today.
I see all the banks underperformed in particular today.
Yeah, well, the banks are seen as an Australian GDP proxy by foreign investors. Clearly, Australian GDP growth is being revised down. We now have lower GDP growth in America, which is hard to believe in a mining boom. And there's genuine concerns from some foreign investors that the banks are going to have a little bit more of a bad and doubtful debt cycle, and that unemployment is picking up in Australia, and that's probably a valid concern. So banks were the star underperformer today.
And, of course, all of this seems to be weighing on the dollar, relatively speaking, because it's still above parity, of course, but it's come down a lot in the last few days.
Yes, the Aussie dollar has dropped about 3 cents ever since the data started softening last week. Fair enough. I mean, interest rate cut expectations are now increasing. There's a bit more pressure on the Reserve Bank to do something in April and May, which I think is probably valid. The data is clearly worse than expected, and that's why the currency is falling, which is interesting because the market thinks that China is getting a bit better, but the currency is delinking itself from China because of Australian concerns.
Just to a couple of stocks. GrainCorp, I see, put on a big rise today. Now, is that following those reports that Glencorp is interested in that Canadian wheat giant Viterra?
Absolutely, Tiki. You know, the Viterra takeover story or rumours got going on Friday night in America and Canada. I mean, GrainCorp's one of a few listed grain traders in the world, has very strategic assets, and the reason it rose 4% today was absolutely on the Viterra takeover rumours. And look, it's not out of the realms of possibility that GrainCorp is a takeover target itself, so the market might have been right to move that stock up today.
On the other hand, Pacific Brands is down over 4.5%, with its private equity suitor not playing at the moment.
Little bit of buy the rumour, sell the fact about this one, Tiki. I mean, obviously, the Billabong deal seems to have been knocked back by Billabong a couple of times. Pacific Brands, there has been hopes that Pacific Brands would be, a target of private equity, but the bid doesn't seem to be forthcoming. And I think, look, there's a bit of hot money in some of these stocks, and when hot money doesn't get an instant result, they tend to head for the exit. And I think that's happened post the Billabong disappointment.
Charlie Aitken, thank you very much for joining us again.
Thank you, Tiki.